We'll come back to default. Credit cards are becoming less rewarding and more risky. They used to provide clear advantages, but now feel more like traps. Let's explore the factors driving this degradation. Any key aspect is the shrinking of rewards and increasing of requirements. We're seeing an erosion of reward rates with cash-back percentages decreasing and point values in airlines and hotels getting devalued. Simultaneously, the spending requirements to earn those same rewards are increasing. Additionally, rotating bonus categories now require active enrollment, and there are spending caps that reduce your overall earnings. The categories themselves are constantly changing, making rewards unpredictable. To add to this, the minimum spending amounts required to get sign-up bonuses are higher, and you have less time to meet those spending requirements. Another problem is the creep of fees and reduction of grace periods. There are hidden fees like foreign transaction fees on travel cards, balance transfer fees that negate any savings, and rising late payment fees even with a history of on-time payments. Annual fees are increasing without a corresponding increase in benefits. We're seeing shorter grace periods to pay balances before interest accrues, and in some cases, interest is calculated from the transaction date, eliminating the grace period entirely. Then, there are the new and obscure fees such as inactivity, fees for cards not used frequently, and even fees for accessing online account statements. Further point to consider is that data harvesting and privacy concerns are on the rise. Credit card companies aggressively collect data, tracking your spending habits for targeted advertising and sharing that data with third-party partners. They can even track your location through your card usage. Privacy policies are becoming more difficult to understand, and they frequently change without clear notification. You often have limited control over your data sharing preferences. The risk of data breaches is also increasing, as credit card companies are a target for hackers, and some lack robust security measures. Here are also issues with skimpier benefits and weaker protections. Purchase protection is reduced, with shorter coverage periods for damaged or stolen goods, higher deductibles for claims, and more exclusions from coverage. Travel insurance is diminished, with lower coverage limits for trip cancellations or delays, fewer covered events, and increased restrictions on eligibility. Even fraud protection is weaker, leading to longer investigation times for fraudulent charges and more difficulty disputing unauthorized transactions. It is also important to note that credit card companies engage in targeted marketing to vulnerable populations. They use predatory lending practices, offering high interest rates to individuals with low credit scores. The easy access to credit leads to overspending and debt accumulation. The marketing campaigns themselves are often misleading, with exaggerated claims about rewards and benefits and a lack of transparency about fees and interest rates. This is especially problematic when they are targeting students and young adults with limited financial literacy. Ultimately, credit card benefits are diminishing while costs and risks increase. Consumers need to be more informed and cautious when choosing and using credit cards. Actively manage your spending, compare offers, and prioritize your financial well-being over fleeting rewards. Research and comparison is key, and consider canceling and use cards to limit temptation. Thanks for watching. See you next time on Default.